and welcome to this third session of GST sector specific workshop. I request WRC office to play ICAI motto. Thank you.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Welcome all in this workshop on sector specific GST issues. We have with us our humble and visionary chairman, CA Ketan Sayya sir, Vice Chairman, CA Rajesh Agrawal ji, Chairman of Direct Tax Committee and Regional Council Member, CA Sanjay Nikam ji, Coordinator of the session, CA Ishita Shah, and our expert faculty of the day, CA Darshan Ranavat ji. So we welcome all the participants here, and I request now to our chairman sir to give us words of wisdom. Chairman sir, over to you, sir.
Thank you so much, Mishan Bhai. Since Sanjay Bhai is there, I'll request CA Sanjay Nikam, Direct Tax Committee Chairman, to first address.
Thank you, Chairman Sir. Ketan Sayya, WRC Chairman. Also, I appreciate the presence and hard work done by the Bhishan Shah, Chairman of Indirect Tax Committee, and well supported by Rajesh Agarwal ji, Vice Chairperson of this committee. Also appreciate the efforts taken by Ishita Shah, Coordinator of today's session, and the faculty, Darshan Ranavat sir, for your kind, gracious presence here and contribution to the fraternity. Friends, we have seen that the Indirect Tax Committee, under the able guidance of Ketan Sayya sir, is very active, and in some sectors, actually, this committee has created a competition at WRC, that every committee is pursuing their goal in so effectively. The other committees are also encouraged, and let me honestly say that our Directors Committee also is encouraged by the activities done by the Bhishan Shah sir and Rajesh Agarwal sir. Let me honestly accept that the way you are conducting activities, and also Direct Tax Committee also is in competition with you, and in this healthy competition our fraternity and members are getting benefited. That is the object of our enthusiastic and intelligent Ketan Sayya sir, Chairman. He is creating such atmosphere that everyone is working hard, and as we know, the indirect tax is a very unique tax and is a transaction based tax, and very wisely and cleverly Bhishan Shah and our Ketan Sayya sir come out with this idea to cure the program on transaction basis, industry basis, and that way a deep, in-depth study of particular industry can be done, and the problems and solution to those problems can be achieved through the expert in the particular stream or particular industry can be achieved. And definitely it will reach out to the last member of the fraternity, since we are doing it virtually, because in nowadays, when in busy schedule, it is not easy for our fraternity members to attend physically in all the seminars. So we are taking benefit of the technology, and WRC is standing with us and providing such a platform to us, and the brilliant committee members and RCM like Bhishan Shah and Rajesh Agarwal ji is taking due advantage of this situation and reaching out to the members. So all the best to all of you. Happy learning to all of you. And may these sessions, or number of these sessions may increase, and our fraternity at large will be benefited with this. Thank you very much, Bishan Bhai. Take over the
Thank you.
charge.
Thank you so much, Sanjay bhai, for your all kind words. And in fact, I also echo in what Sanjay said. Bishan bhai is, so dedicated, and the kind of program which he is curating. Not only this, we are one more fantastic program is in pipeline. Maybe by tomorrow we will announce that program. The use of technology for GST is one of the, brainchild of Bishan bhai, and that is a need of an hour today. So Bishan bhai, back to back so many program. Not only these series, we are having a fantastic residential refresher course at Goa on 25th. So those members who have not registered, requesting all of you to register for that. The other program which are in pipeline are truly, dedicated to the indirect tax committee. They all are working very hard. The both chairperson and vice chairperson, be it Bishan bhai, be it Rajesh bhai, they are always supportive and doing great job. Coming to today's session by Darshan, I think, the transport and logistic have got its own challenge. There are type of service provider who are registered, who are not registered. Within, them, somebody is having RCM, somebody is charging us, and unregistered we don't get the data, registered we get the data through those who have uploaded the data, and equal challenges in case of warehousing industries. So I think, the session is going to be very interesting with the Darshan's expertise and knowledge, hands-on experience on this particular sector. And Darshan, Bishan by ably picking up Darshan for this session. I think that was the real good part. So Darshan bhai, thank you so much. Today is a working day. You have spared your valuable time and come and spared your time. I'm really glad to see you as a speaker. Thank you so much. Thank you to Ishita as well for being coordinator and coordinating this direct tax program. Thank you, Ishita madam. Thank you so much. With this, again, I request, since we have Vice Chairman Rajesh Agarwal here, may I request Rajesh bhai also to say the few words before we hand it over to Bishan bhai for the actual program.
Thank you, Chairman sir. Thank you, Chairman Bisan Bhai, Indirect Tax Committee. Thanks to all the participants also for your active participation. Really, we are enjoying the session, sir, because these are very different than other sessions. These are sectoral specific programs curated in such a way the provisions of all GST laws are equally applicable to all the industries. So we are indirectly reviewing or going through all the provisions sector specific. Really appreciate the efforts of faculty for their session. They are accepted our invitation to be, as a speaker, because so speaker has to prepare even though they are practicing and handling cases day to day. For just to have a session, they have to again prepare with respect to all the provisions, even though some kind of clients they don't have, but they have to prepare for that presentation. Thank you, Darshan bhai, for accepting our invitation. Bishan bhai for all efforts, our chairman WIRC for supporting. Really, sir, the person like you as a leader, really appreciate for your dynamism and positive approach. Sanjay Nikam sir for your kind words to the committee. Thank you.
Thank
And
you.
thanks to all participants. And again, one more program we have curated just yesterday, 6 days workshop on litigation. Friends, you can, but it is a physical program at BKC. Who are into litigation practice, I must say everyone should register for this program. Thank you very much.
Yeah, I forgot to mention about that. Good, Rajesh bhai, you reminded, and this is a central committee program of.
Over to you, Bishan bhai.
Yeah. Thank you, Rajesh bhai. I think this program which Rajesh bhai mentioned, it skipped my mind. It's a program curated by the Central Committee of ICI, jointly by the Professional Development Committee and Indirect Tax Committee. and where Rajesh Bhai has worked very, very hard along with the Honorable Central Council member Vishnu Agarwal ji. So thank you for that also, Rajesh Bhai. Thank you. And over to you, Bishan Bhai.
Thank you very much, sir. Chairman of WARC, who is leading us, and he has given us a freedom to organize such fantastic programs. Also, it is not, you are not stopping only to the organizing. How the execution are doing perfectly or not, you take that care as well. And even you motivate other committees also to do something in their committees, to do programs of say indirect tax committee का हो रहा है तो संजय भाई आप भी कुछ कीजिए, and that's how membership at large is being benefited. So chairman sir, thank you very much. And yes, GST RRC, we are like, we have registered participants which are minimum जो भी guarantee दिया हुआ है वो तो we have completed, and today or day after tomorrow we are going to close the registrations as well. So I request all members who have joined today in this workshop webinar, I request if you have not taken benefit of these RRC, please get yourself registered so you can not be disappointed. And also with the WRC website, if you go, there is this GST litigation series which is nicely planned. I request members to take benefit of that as well. And as Ketan sir has said that we are going to launch a technology program, so I request all the members to visit to WRC website and register for this technology, because we all are currently driven through technology, and that smartness of technology will also take you to work-life balance as well. Because we just discussed with Darshan Bhai that when any drafting is required to be done, then it will take 2 or 3 days time. But if with the advent of AI and chat GPT and other apps, we can do it in I can say in the minutes, whatever you want to do. So smartly we can do the work, and technology is inevitable. We need to adapt it. We need to execute our task through technology, and that's why we are planning this technology series as well. Today's topic, that is transport, logistic and warehouse. In service tax also we are having problems so far as the cargo handling service is concerned or a GTA is concerned. Sometimes it becomes a planning tool as well. If you have not paid tax, then you can say that I was not liable to pay the tax. I am a GTA, and person recipient of the service is liable to pay the tax. And that's how the transactions being planned. If you want to take the credit, then we can say that it's a cargo handling services, and hence I am eligible for the credit and I have paid full tax, and that's how the transactions are being planned. So these are the things which I guess Darshan Bhai will take care of it in his session. Also, he is going to touch on the case studies as well. So yes, Darshan Bhai, I request that you take all those case studies as well for the benefit of the membership. Not taking much of time now. Thank you, Chairman WRC sir, Sanjay Nikam sir, and Rajesh Bhai for being here and helping us to make more benefited program for the members. With these words, I now request CA Ishita Shah to introduce our learned faculty of the day. Thank you very much.
Thank you, Bishan Bhai. Chairman of WIRC, CA Ketan Sayya sir, other committee members, and CA Bishan Shah sir. Today I have privilege of introducing a very learned faculty, CA Darshan Ranavat. He is an all India ranker in CA final exam. He has spent over a decade working in indirect taxes, and he is partner at Gabawala and Company, the firm which is exclusively working in indirect taxes. He has worked in multiple industries with multiple clients, be it construction, engineering, or the industry which is concerned for today's topic, logistics and warehouses. He has also written multiple books. He has delivered multiple lectures at ICAI, Chamber of Tax Consultants, BCAS, and at various other forums. He has also authored a book on input tax credit under GST, which was published by Bombay Chartered Accountants Society. So today we have privilege of having such an experienced and faculty with such rich knowledge, and being the topic today, which is actually important for each and every chartered accountant, because each and every client has some or other connection with transport industries or warehousing. So I think today's lecture and is going to be really important for all of us. And with this, I'm again very thankful that to CA Darshan Ranavat for giving this precious time. Thank you.
Darshan bhai, over to you, sir.
Thank you, Ishita. Firstly, good evening, friends. I'll thank Ketan sir, Vishan bhai, Sanjay sir, and Rajesh ji for giving me this opportunity and especially taking up this complex topic for discussion. Without much ado, I'll share my screen and start the presentation. Friends, it has been 8 years since implementation of GST, and I would say that if you believe that GST is an adventure for persons practicing in this domain, this sector, transport, logistics, and warehousing, I would say, is the most thrilling ride of this adventure park. And this thrilling ride is called as roller coaster. Why I'm telling this is because this sector, when we say logistics per se as one term or one sector, it involves multiple subsectors in itself. It is just not just a single term logistics. There are customs house agents, there are warehouse keepers, there are port authorities, freight forwarders, steamer agents, many such sectors which are involved in providing services in this broadly used termed as logistics. Now, friends, this complexities in these sectors multiply because of cross-border transactions. So, when you talk about any import and export of goods or services, people generally confuse it with the import and export of services itself. So, there is a distinction between the import of goods for which would be an export of services and import of services. So, sometimes when we talk about this with the players in the industry itself, they get confused, and that is why the sector and the complexities multiply. With this brief background, friends, I'll just start my presentation with the first slide. So, just giving a brief background of this entire chain, a high-level idea of the entire activities which are involved in this sector. Now, let's take an example where, say, a exporter in India wants to send this good to his customer in Dubai. There will be a lot of steps which are involved in this entire chain of activities. So the goods will be dispatched from his godown or his factory, and then it will go to a transporter's godown for consolidation. Then it will be ultimately transported to the port authorities where customs formalities will be completed and certain documentations like your shipping bill, your late export order, EGM will be prepared. And then the actual transportation activity begins for this international leg when the goods are loaded on the vessel. Or say, and then when the goods reach ultimately, say, to the Dubai port, all these activities which were happening at the origin port in India, almost similar activities will have to be undertaken at the destination port, but in a reverse sequence. Again, same customs formalities will have to be done by clearing the goods, paying your customs duties, filing your bill of entries, doing customs assessments. Then again, probably it may be transferred to a transporter's warehouse, and finally it reaches the customers. So the friends, we see that there are a lot of activities involved, and you will find that in this industry there will be players who are specialized in certain types of activities only. There will be persons who are dealing only into warehousing activities, some are doing only transportation. Then there would be players who would be doing everything or would be doing multiple activities in this entire chain of activities. And lastly, you would also find that there are certain players who would themselves not do anything but outsource everything to other players, and they have a very lean operation team, working in this industry and doing only coordination with various vendors and customers. So that is why this industry is very complex, my friends. And you will find in our discussion today, because of this reason, that a lot of questions over around whether what activity would qualify as a composite supply, whether there is any bundling of any activity. And with this background, friends, I'll just give an introduction to the agenda. I've divided my discussion into three broad baskets. First is transportation, wherein we will discuss about certain issues in the domestic transportation activities. Then international transportation activities. I've taken a few issues in the warehousing sector. And lastly, certain other areas like your charter hire activities. And we'll discuss a touch upon the bundling of various activities, which comprising of all the activities which we discussed today. So friends, when we talk about domestic transportation, the first thing which comes to our mind is the road transportation, which we commonly call as the goods transport agent. This sector has seen a constant change since the implementation of GST. When the law itself was implemented in July 2017, the service providers activities were under reverse charge mechanism, meaning that they were not required to pay any tax, and the tax was to be paid by the service recipients at the rate of 5% with no corresponding ITC to the service providers, to the transporters. Now, my friends, this sector, goods transport agency, I remember that this is one of the first sector to be under reverse charge since the service tax regime itself. And that itself, the government intended to continue in this GST regime. Now, but under service tax regime, the scenario was different because there were a lot of dealers who could not get credit of the service tax paid under reverse charge. But coming to GST, you would realize that the intention of the government was to unlock the credits so that the inefficiencies in the tax regime go away, and overall cost of logistics in this entire industry goes down. That is where, after implementing GST within 40-45 days, on 22nd August 2017, the government gave two options to all the transporters. They said either you opt for forward charge, where you pay tax under 12% and you also claim the credit, or you continue with the reverse charge mechanism and the service recipient will pay tax under reverse charge at 5%. So these were two options given, and still there were doubts when it comes to deciding on whether I should go for forward charge or reverse charge, because it more than a tax implication, it is a decision of business affecting your cash flows, because if you don't get ITC, your purchase of capital assets has a huge amount of investments, and that is where it bears also huge amount of GST. So again, if we see in 2022, the government again made changes, and they said either you go for 5% RCM with no corresponding ITC, or you go for 5% forward charge with again no corresponding ITC, or you go with 12% forward charge with ITC. So the government gave you a buffet of all three options in this amendment from July 2022 onwards. Now, my friends, with this buffet of options, the complexity definitely is there in the sector if you opt for a full RCM option. Now, this I want to touch upon this specific issue, my friends, because I generally tell the players in the industry that when you opt for full RCM, it means like you are opting for a gym membership where even though you pay the money, all the heavy lifting still has to be done by you. Why? Because firstly, full RCM option means you don't get any credit that is embedded in the notification itself. But when we go to section 17.2 and section 17.3 of the CGST Act, it says that it again says that your activity which is under reverse charge is deemed as an exempt supply, and therefore the corresponding ITC again is not available. So how this has an implication or a major implication for this sector, I'll quickly come in 2 minutes. But before that, I'd just like to touch upon some other facts. Now, because this sector, I would say that one would believe that if I have opted for full RCM option, then why should I take registration? my customer is going to pay tax under RCM, then why should I take registration? But there would be certain other activities which you are doing which are taxable. There would be sale of assets like trucks or your other assets. There would be sale of scrap, your tires, your spare parts which you would sell, which are taxable and on which you are required to pay tax under forward charge. And therefore, you are required to take registration under GST. Now, the problem here multiplies because I may be having my transport offices in multiple states, operating in multiple states, picking up cargo from multiple states, unloading cargo in multiple states, and therefore I am required to take GST registrations in multiple states. And I have multiple GST numbers. Now we all know that when there are multiple GST registrations, the entry to Schedule 1 of the CGST Act, which is a deeming provision for activities between related persons or persons having different GST registration under the same PAN, even if the supply of goods or services without consideration. So entry 2 forces you to derive a value and charge a tax and raise an invoice also. Now imagine a situation where, say, I have an office in Maharashtra, I have an office in some other states also. Now I have taken a contract to send the goods from Mumbai to Delhi, and I have collected the freight in Delhi. My customer here pays under RCM. There is no problem. Now when the vehicle reaches Delhi, the consignment is unloaded. From there, the vehicle, say from Delhi, again, it is not necessary that it will come back to Mumbai again. If there is a consignment requirement that the Delhi vehicle has to be used for transporting certain goods to, say, Rajasthan, so again the vehicle will pick up goods from Delhi, the freight may be collected in Delhi, and the vehicle will go to Rajasthan. Likewise, from Rajasthan, it can again go to Gujarat and the freight would be collected in Rajasthan. So here, if we see that a single vehicle, a single asset is being used for generating income in various states. And that is where the problem is. If we read this problem with entry 2 to Schedule 1, then there has to be certain level of a level of branch transfer of services which you have to identify and raise an invoice and pay tax. Now, generally, when we talk about branch transfer of services, we advise clients that if your recipient location, if your recipient branch is able to take full input tax credit, then we have a benefit of second proviso to Rule 28. Rule 28 is specifically derived. Rule 28 is specifically provides a valuation mechanism for transactions between related persons or transactions between GSTNs under the same PAN. And second proviso says that if your recipient location is able to take full credit, then whatever value you adopt in the invoice will be accepted by the department and will be deemed as a transaction value. And there was a circular also issued in 2023. It says that even nil value will be considered as a transaction value wherever this Rule 28 second proviso is applicable. But come to this sector where we are saying that everything is under RCM, my entire income is majorly under RCM, then I am not getting any credits. My recipient location is not able to get any credits. And therefore, this benefit of second proviso to Rule 28 is not available. And this using of asset by multiple location becomes a big problem because there has to be certain value which you have to identify, which has to be an open market value on which the Maharashtra location when sending goods, when Maharashtra location, when say which is the head office, which say procures the motor vehicle, the truck, and the truck is being used by all the locations for generating income, then there has to be certain value which has to be identified. You may call it a higher charge or some other charge, and you are required to pay tax on this activity, which is a big problem for this industry because there is no corresponding ITC and the cost of logistics overall increases. The cost of operations increases. The second problem here arises here that what happens if, say, the truck is purchased or say registered in RTO by multiple locations. Say I may have a head office in Maharashtra, but it is not necessary that all my trucks or vehicles will be registered in Maharashtra. The trucks or vehicles may be registered with RTO in Delhi, in Rajasthan, in Gujarat, anywhere. So how do I decide who is the owner? based on RTO registration, or should I say that head office is the owner irrespective of the RTO registration? In my view, it has to be that the answer should be that the head office is the owner. RTO registration is not important, but still this doesn't solve the problem. Of course, it reduces the problem that you are not required to do multiple registration, multiple branch transfers from all locations. But the problem of branch transfer from one location from head office still continues. The next issue which I want to highlight is with respect to input service distributor. Now, many people would believe that since there is no input tax credit, then why should I do input service distribution registration for a GTA? So the problem here is that your input service distribution registration is not relevant whether you are eligible for ITC or not, because the definition of input service distributor says that if office receives an invoice for an input service which is being used by other offices, then you are required to do you're required to take an ISD registration and distribute the credits. Now let's take an example. Say a GTA service provider procures a software, a specialized software for its operations. Now on which the software vendor charges GST. Now this input service is actually being used by all the branches across the nation. Now, even though the head office who procures the service is not taking ITC, the ISD provision mandates you to take a registration, distribute the credits to all the locations, and then reverse the credit in respective locations. So this is a big problem for this industry, because even though no ITC is eligible, but distribution by ISD and then reversing the same in respective GST is mandatory. Now these two issues which I've highlighted are very critical for this industry, because I've seen that many people are not aware about this issue also. Coming to the next, international transportation leg. Now we all know, sir, we all know that international transportation would broadly involve two areas, which is air transportation or sea transportation. Before going into the issues, giving a background of what are the current applicable GST rates and exemptions for the sector. So notification number 11 says that transport of goods in a vessel will attract 5% GST rate, and there is a condition that you cannot claim ITC on the goods which are consumed in the services. Then for air transport, there is no specific entry, so therefore it falls under a residuary entry for which is goods transport services, and tax is payable at 18%. So your sea transport tax applicable is 5%, and air transport for goods is applicable at 18%. But there is an exemption given for transportation of goods by an aircraft from a place outside India to India. So this means that whenever you are importing goods by air, the air freight which you have incurred should not bear any GST, and there is an exemption under entry 19. Now it's astonishing to see that though the government says we want to promote our exports, but the export freight for air is taxable at 18%, and import freight for goods imported in India is taxable at is exempt, and that is where we see that there is no logic in giving such exemption and taxing the export activities. But be what it is as it is. Now to summarize this, sea export freight, as I said, GST at 5%, air export at 18%, sea import at 5%, and air import freight at exempt. Now this industry saw a major change in October 2023. Prior to October 2023, the place of supply was determined based on the destination of the goods. So if the goods were going outside India, if the goods are being exported from India, the place of supply was based on the destination of the goods, which is outside India. Now from October 23 onwards, this provision with the place of supply, which said that it will be based on destination of goods, section 13(9) of IGST Act, has been omitted. And now the place of supply is the location of the customer. This is also clarified by the government in circular number 203/15 in 2023, who says that for all your transportation activities, transportation of goods activities, your place of supply will be determined based on the location of the customer. So now what happens? From 1st October 2023, your movement of goods is not relevant to determine what is the place of supply and whether the transaction is taxable or not. The only important point which you have to see is what is the location of the customer. And that is where we see that whenever you are providing services to a foreign customer for any transportation activity by air or sea, your services may qualify as exports and be zero rated, subject to satisfying certain conditions of export of services given under section 26 of the IGST Act. So if you satisfy conditions, primarily receiving foreign currency and some other conditions, if you satisfy those conditions, it qualifies as export of services. With this background, I'll take up the issues in this industry. The first issue in this, which I see, is whether, because we have seen this recent issues being raised by tax officers, that whether the concession being the 5% GST rate and the exemption on import air freight, whether this concession is available only to airlines and shipping lines, or is it available to all the players who are engaged in this activity? This is a big question mark. Because in all those cases, the airlines and shipping lines may not directly raise the invoice on the shipper or the consignee. If you see, this industry is very vast. The airline or the shipping line do not have the capacity directly to reach each of the shippers or the consignee. And that is where you will see there are intermediaries, or which is say distributors of those services, which are known as freight forwarders, who are involved. So whether the freight forwarders who are involved, whether even they can claim this concession and exemption, how do we decide that? So here I'll just go back to the concession entry. So if you see the entry clearly, it focuses on the activity. The activity is transport of goods, entry 9(2) in the first table and entry 19 in the second table. Again, if you see, it focuses on the mode of the transport and the activity, which is transport of goods. So it says the mode of transport should be either vessel or aircraft, and you should be doing transportation activity. So coming back to this slide, whether this concession is available to everyone, I'll go back to one section 65105 under the Finance Act 1994, where certain list of taxable services were given. Under that entry, there was a clause ZZN, which says that services provided or to be provided to a person by an aircraft operator. This specific phrase, aircraft operator, was used under service tax regime in the pre-negative list regime. But post-negative list regime and under the GST notifications, this aircraft operator word is not used. So it means that the lawmakers did not restrict that this exemption or concession should be available only to aircraft owners or shipping lines. The focus, I would believe, should be on the phrase transportation of goods. Now, when we say transportation of goods, how do we decide that who has done transportation of goods? What are the factors which will determine? Because primarily, if we see, in many cases, the airline and the shipping line, it is also possible that they have entirely outsourced this activity of selling the space on their vessel or shipping line to some other agency. So then who is doing transportation if they are not directly selling the space to the consignee or the shippers? So for this, we refer to some provisions under Carriage by Air Act or Carriage by Sea Act, also a similar provision. Now, Carriage by Air Act 1972, which also borrows certain provisions from the International Montreal Convention and Warsaw Convention, they have created a distinction between carriers. Now, in this industry, shipping line and airlines are commonly termed as carriers, so I'll be using this term carrier. So they have defined carriers being two separate persons in separate situations. They said carriers can be of two types. One is the contracting carrier and one is the performing carrier. So the performing carrier would be the actual shipping line or the airline who is going to do the transportation of goods activity. And contracting carrier would be the person who is taking the responsibility for transportation. He may not be actually performing the activity, but still he is taking the responsibility of transportation, who makes a contract of carriage. And that is where who makes a contracts of carriage with the consignor, and he is termed to be as a contracting carrier. A similar reference is found in the International Air Transport Association's guidelines, and also the Freight Forwarders Association, International Association's guidelines, where they have also created a distinction between contracting carrier and performing carrier. And they say that both the carriers have undertaken the responsibility for transportation of goods. And this again was clarified in circular number 197/7 issued in service tax regime, which says that any person who assumes the responsibility for transportation of goods should be treated as a carrier itself. It doesn't directly say it, but if you read it carefully and if you read it with other Carriage by Air Act and the guidelines given by IATA, it indicates that any person who is assuming the responsibility of transportation of goods should be given treated as a transporter of goods. And therefore, I would believe that person who is assuming the responsibility of transportation of goods should also get the concessions available. It is not necessary that only the airline or shipping line is should get the concession. Now, how do we establish this? Whether I am doing the transportation or I have assumed the responsibility of transportation, there will be certain documentations which are to be maintained, which will help you in navigating through all such queries from the tax officers also. So there will be a document called as House Airway Bill, which demonstrates that you are undertaking the responsibility as a carrier for transporting the goods. Your invoice copies vis-a-vis airline shipping lines, whether you have undertaken freight negotiations with the shipper and the consignee, who is taking the insurance vis-a-vis any risk or damage during the transportation. Of course, in most of the cases, you will see that the consignor and the consignor or the consignee will take marine insurance for the cargo. But we have also seen that the for freight forwarders or other players in the industry also take an insurance, because there are possibilities that if there is any damage or any loss to the goods, then the claims are filed against the freight forwarders also, and therefore they take insurance for doing the transportation activity also. So all this documentation will help you in prove that you are doing transportation activity, and therefore you are eligible for the concessions given by the notifications. Now, with this argument, I would also like to touch upon a different argument, which is termed as freight trading. Now, if you see, my friends, that a vessel generally has a capacity of around 20 to 25,000 of TEUs. Now, TEUs, we generally use a technical term to define 20-feet container, which is which will house your goods. So a vessel has a capacity to hold around 20,000 containers, and each container would have a capacity of around 20 to 25,000 kgs to carry goods. Now you can imagine the volume of the goods which are to be carried in a container. Now it is not practically possible for the vessel owner or the aircraft owner, for the vessel owner for our discussion, to sell this entire space to the consignee or consignor directly. And therefore, we have, just like imagine a manufacturer who is doing a large scale manufacturing of products, and if he has to sell the goods to the consumers, though he cannot do unless he has a model for distributors. Even though today we have e-commerce being operated, but still we have this distribution model which is required for selling for the goods reaching the end consumer. And that is where, if we try to adopt a similar model over here, because in a manufacturing distributor model, you would see that the HSN and the tax rate which are applied at each leg of the transportation of each leg of selling of goods from manufacturer to trader to distributor or to the consumer, the HSN for the goods will be same. The tax rate on the goods will be same. Why? When the manufacturer of goods is someone else, because the ownership and the risk and reward passes at each leg. So I want to borrow similar argument for this activity of freight forwarding, or I would also call it as freight trading. Because when a vessel owner sells a certain amount of space to a freight forwarder, that freight forwarder again sells a space to the consignee or the shipper. In that case, also I would say the risk and reward, if you are able to establish that the risk and reward transfers at each stage, and I would say that you have a good one more argument to make that your concessions or exemptions are available. So what are the attributes which you should keep in mind while seeing that whether your transaction qualifies for this argument of freight trading? One is to establish that your transactions on a principal to principal basis, that is the risk and reward at each leg is being transferred. Now, how do I do that? Because if you see in many cases, the actual sale value of the freight, now say the shipping line has sold the freight to me for say $100, and then I may sell the freight to my customer who is the exporter for $120. Now this $20 markup which I'm earning is actually never known to the airline or shipping line, which shows that I am eligible to earn reward based on my own efforts. And that shows one of the important attributes of a transaction being on a principal to principal basis. Now, when we come to the risk side of it, there may be losses in case of unsold inventory, just like we have losses in case of unsold inventory in a manufacturer distributor model. Now, I may buy space in bulk on on a vessel, but it is also possible due to market conditions, I am not able to sell the entire space to the consumers who are the exporters or the shippers. Secondly, I would also have the risk of recovering consideration and from my customers who are exporters, and there's also risk of the bad debts. And therefore, if I'm able to establish all these risk elements with an additional right of recovery in case of damage or destruction of cargo, who will be responsible if there is a damage or destruction of cargo during the transportation? Now, we have seen that the responsibility is twofold. Vis-a-vis the airline and the shipping line, freight forwarder generally has a right to claim in many cases. Vis-a-vis the shipping freight forwarder, again the shipper or the consignee has a right to claim. Now, if you are able to establish all these attributes together, then you have a good case to argue that just like in a manufacturer trader model, there could be a same tax rate or a same rate of or same HSN applicable to the entire chain. Similarly, in this activity also, the entire chain should get the concession and the exemption. And these principles have been again echoed in two decisions which I am referring. This global transport services, this AR is from the service tax regime, therefore I'm relying on it. And even in the case of Chinuba and Kalidas brothers, a similar principle was being followed. So this was the first issue in this industry regarding the concessions and the exemptions which are available. The next issue which I want to touch upon is related to an overseas transaction. Now, we all know that this entire industry works on a global partnership platform. Because I, being an Indian forwarder, it's not possible for me to open in my own offices in all the countries wherever my operations or my goods of my exporters are being dispatched or being taken off. So I would have partners in all those countries who would help me give business, who would give business to me. Sometimes I would give business to them, and they help each other in operations, and that is how this industry works. Now, in a typical arrangement, say in this example, I have taken an arrangement where I'm an Indian exporter exporting goods from India, but the arrangement is such that my exporter, my foreign customer who is the importer outside India is going to pay the freight directly to a foreign shipping line, say $100. And I, being an Indian forwarder, get $30 for either referring this customer or either referring this consignment or for doing certain handling activities. Now, what is the role of Indian forwarder for which it has earned $30? I have seen in many cases that this role is not clearly documented or is not clearly available through any of the agreements or even invoice copies. That is where the tax implication of this $30 becomes very questionable. Because the $30 may not be in the nature of freight. Industry sometimes uses the term as profit share, sometimes they uses the term as commission, and this identifying the nature of service becomes a big question mark. If you say it is commission or it is an intermediary service, then it attracts a tax at 18% because of section 13(8) of IGST Act becoming applicable. If you say it is in the nature of certain handling support in the Indian port which you are doing, for which you are charging this $30, then again the place of supply may be India because you have performed the activity in India, and therefore it could be taxable. If not, and if you are able to establish this is some different activity which you are doing, then you have to analyze whether it qualifies as export of services or not. So this is one area which I want to highlight, that there is no clarity in the documentation to show that what is the $30 earned for, and that is why we need to see that the Indian forwarder who is earning this $30 has proper documentation. Now, continuing this issue slightly ahead, we see that in many cases, say in my earlier example, I being Indian forwarder was earning $30. Now it is also possible that in some cases I am paying certain amount to my foreign global partner. So because this global network being so integral and so strong, there will always be to and fro of activities between overseas partners and Indian partners. And that is where you would see that at the end of certain periods, say a fortnight or 1 month, these players would do a settlement of their accounts based on the net receivables and payables. Say for and this settlement is done through a statement called as statement on account. Now, what is the issue in this settlement? The issue here is that I've seen in most of the cases that, say for example, when I'm doing the settlement, after analyzing all the transactions for say a particular month, I realized that I had to receive $1,000 from my overseas partner, and against which I was also required to pay $600 to my overseas partner for certain activities which he has done on my behalf in the foreign country. And on a net basis, I am supposed to receive $400 from my overseas partner. Now, what I've seen that they would lodge this document for $400 with the banker, receive the $400, and then regularize the transaction books of accounts. But in the books of accounts, the transactions are separately recorded. $1,000 is recorded as my income, and $600 is recorded as my expense, and $400 is shown as a net settlement account in the books of accounts. But people fail to realize that such suo settlement of foreign currency receivable and foreign currency payments is not permissible as per RBI guidelines. As per RBI guidelines, given the master direction, all such netting of remittances has to be operationalized or supervised through your banker, AD category 1 banker, authorized dealers, and the guidelines prescribe certain set of procedures, certain set of documents which you have to follow, submit to the banker, which will again be approved by RBI, and that is how this entire process has to be streamlined. You cannot directly do a suo settlement, suo adjustment of the net receivables and say I have received $400 and close your books of accounts. You clearly have to complete all the documentation, obtain your approvals from your authorized dealers that you want to net out this amount, and only then you can get the net foreign currency of $400. Now the problem here multiplies, because after this omission of section 13(9) of the IGST Act, when the place, that is from 1st October 2023, the place of supply became my customer location. So we've seen that the volume of transactions which qualify as zero rated supply or export of services has increased from 1st October 2023 because of this change in place of supply provisions. Now, this has resulted in a situation where a lot of ITC is accumulated, and I am required to file a refund claim on account of export of services. Now, the rules and the notifications prescribe that when I am supposed to file a refund claim, I need to give or submit an FIRC or BRC to show that I have received the foreign currency. Because receiving foreign currency is one of the conditions which you have to satisfy for qualifying the transaction as export of services. Now, in this case, when you have received $400, but your export value is for $1,000, so how will you establish that if you want to claim an export, when you file a refund claim, you will show an export turnover of $1,000, but against which you have an FIRC or BRC of say $400 only. So your claims will be restricted, and moreover, you will be questioned that why have you not received the $600, and that is it will go for the entire process will go for a toss. And this is why it is important to obtain the RBI approval, comply with the RBI regulations, and obtain the specific approval for netting of all those remittances, get a CA certificate to show that what all remittances you have netted off against what all payments, and then you apply for refund. Recently, this case was before Gujarat High Court. Similar case from this industry itself, in the case of Cune plus Nagel Private Limited, and in this case, the assessee had specifically obtained an RBI approval for netting of remittances with its overseas group companies and other partners also. And you would see that despite that approval, they had when they had received the net remittances, they applied for refund claim, and their refund claims are being rejected by saying that you have not got FIRC for the full amount. The assessee had submitted a CA certificate, had submitted the RBI approval, saying that I have an RBI approval to get net remittance, and I've got the net remittance, which is also evidenced by CA certificate. The High Court said that once there is an RBI approval and there is a CA certificate to show that the remittances were netted out, then you cannot challenge the refund. The refund should be given, and this transaction qualifies as export of services. My point here is that netting off of remittances has to be taken off very carefully. The consequent impact of this is the first point which I discussed was where I have a surplus receivable from the foreign partner. There will also be situations where I have surplus payable to the foreign partner, where I have incurred more expenses. So my global partner has incurred more expenses on my behalf, and wants to collect more money from me. Say he has incurred $1,000, a reverse situation. So we all know that import of services attracts RCM, and the place of supply now for all such freight transactions is the location of the customer. So in all such cases, RCM is payable, but we need to be careful that RCM is applicable on the gross value and not on the netted out value, because many assessees or many freight forwarders missed on this point, and they pay only on the net amount, because the foreign partner will give you one debit note with a net amount. You will pay that net amount and you will pay RCM on the net amount. But law doesn't work that way. You are required to pay RCM on the gross value, and correspondingly, you are also, if you miss paying this RCM and subsequently it is realized that it was payable, you will miss claiming the ITC also. It will be a big cash flow impact for the entity. With these issues in the international sector, I would like to touch upon the next sector, which is warehousing sector. Now, this, friends, warehousing is a very booming industry in India because of development of quick commerce, e-commerce. A lot of global players are interested in setting up their warehousing in India, investing in the capital infrastructure in India, and this industry is seeing a lot of traction. So it is important to see some of the issues in this sector. The first issue which I will touch upon is related to an FTWZ unit. Now we all know that this free trade warehousing zone unit is equivalent to a special economic zone. They have the status of a special economic zone in India. So this specific case which I want to deal is that, say there is an FTWZ unit in India, which is say some on the southeastern part of India, and there is a foreign supplier of goods, say a foreign manufacturer of phones, who wants to supply goods to various Asian countries, say Bangladesh, Myanmar, Thailand, Sri Lanka. So what he does is he ships those goods temporarily into India on a bulk basis. So all these goods will be, say, shipped to India. It will be imported into India because it is going to an FTWZ unit. There is no import duty applicable, and the goods will be temporarily stored in this FTWZ unit. And as and when the goods are, there is a demand for these phones or mobile phones, say in Bangladesh or Sri Lanka, goods will be again re-exported out of India and sent to Bangladesh or Sri Lanka. So the question here is, this will have to discuss the applicability of GST on the services provided by the FTWZ unit in India to the foreign supplier of mobile phones. Now, what is the role of FTWZ unit? The unit is required to provide a dedicated warehousing facility, is required to ensure a safe warehouse of the goods. They are also required to do loading, unloading of goods based on the demand and the instructions given by the foreign customer. The foreign customer per se does not have any establishment in India. So what is the GST applicability on this transaction? Now, before we go into the specific provision of GST, friends, it is important to see that whether the SEZ provisions in this case would override the GST provisions, whether the SEZ provisions permit the government to tax such transactions. So for our benefit, I have reproduced certain provisions from SEZ Act. Section 51, it clearly says that the provisions of this act, notwithstanding anything contained in any other law which is inconsistent, will have an overriding effect. So Section 51 says that it will have an overriding effect over all other acts, including the GST Act. So now we need to see whether the provisions of SEZ have some concessions or benefits for these type of activities. So Section 26 of the SEZ Act, it says that subject to provisions of subsection 2, which will come to subsection 2 also in a minute. It says subject to provisions of subsection 2, the entrepreneur shall be entitled to following exemption. I'll just read the underlined portion. Exemption from or any other law for the time being in force on goods imported into or services provided in an SEZ unit. So if I am providing any services in the SEZ unit, then the services are exempted. Subclause B of subsection 1, it says that exemption from any other law time being in force on goods exported from or services provided from an SEZ unit to a place outside India. Now, all these provisions of SEZ are equally applicable to FTWZ unit also. So, the clause A and clause B of subsection 1 of section 26 clearly says that any activity which is done in SEZ unit or any services which are provided from SEZ unit are exempted from any type of tax. Of course, here clause B also says that it should be to any place outside India. Now, to any place outside India, I would interpret it could mean that the customer is located outside India. Now, if this is there, then why is there a tax, or why is there a tax for any activity which is being done by SEZ unit to even say a DTA unit? Because these provisions clearly override the GST Act. This clearly gives for an exemption. Now, I believe that probably subsection 2, because subsection 1 here clearly says that the provisions are subject to subsection 2. So subsection 2 says that the government may prescribe the manner in which and the terms and conditions subject to which the concessions may be granted. So there would be certain documentation, certain conditions subject to which this exemption will be granted. Now, what are those conditions and exemptions? It is not clearly mentioned, but some of the there is a view in the industry that this exemptions or these conditions are prescribed by the central government through section 16 of the IGST Act. Now, section 16 of the IGST Act says that zero rated supply means any of the following supplies, which includes export of goods or services. And clause 3 and subsection 3 says you need to obtain an LUT to export the goods without payment of tax. So, and of course, the definition of export of services over here will also come in play, which you'll see in the next slide. The question here is whether this section 16 has to be linked with this 26 subsection 2 to say that the exemptions given in 26 subsection 1 of the SEZ Act will apply only if Section 16 of IGST Act is fulfilled. Now, this is a big question mark. There is no clarity on it. But as of now, everyone is still complying with Section 16, and there's no answer to this as of now. Now, moving ahead to this discussion, if we say for the time being that SEZ Act per se has to be linked with Section 16, and then it means that I have to satisfy the definition of export of services. Now, in this case, where I'm giving a warehousing service to a customer outside India, I am in India, I am a warehousing service provider in India, but my customer is outside India, whether this will qualify as export of services. Before we go to that, I would just like to have refer two decisions which say that SEZ Act, how should we interpret SEZ Act, whether it has an overriding effect on other acts. So there is one decision, recent decision under the GST law, given the Madras High Court, which clearly says that the provisions of SEZ Act will have an overriding effect over the GST provisions also. Then there is a decision under the earlier tax regime in the case of L&T hydrocarbon, given by Madras High Court. This decision referred to a earlier decision of Supreme Court in the case of Bajaj Tempo Limited, and it says that when an act like SEZ is enacted for the purpose of promoting your exports, promoting business development in the country, then you have to look at the entire provision in that context. And that is where you have to see that if there are certain provisions or certain activities which promote the intention of this act, then there has to be a liberal interpretation, and this concession or the benefit of this act should be given. Now, if we apply these decisions, then in my view, there is a good case to argue that your SEZ Act is overriding GST Act, and therefore, whatever activities I do from SEZ should be outside the ambit of tax. Of course, the condition is that it should be to any place outside India. In my case, in this case specifically, I'm providing services to a customer who is outside India, and therefore it should qualify as export under SEZ, and therefore there should be no tax under GST. Now, coming back to a discussion that what if this overriding provision of SEZ is, for the time being, if we keep it aside and we say it's not applicable, then whether this activity will qualify as export of services. So Section 2, subsection 6 of IGST Act says that export of services, it defines export of services, which says certain conditions are given. Now, I'd like to focus on the condition 3, which says that the place of supply of service should be outside India. Now, in my case, where I'm doing a warehousing service in an FWZ unit in India, and the customer is outside India, the discussion here should be made is whether this place of supply is outside India. How do we determine that? It will be determined based on Section 13. We all know that whenever there is a service being provided to any customer outside India, we have to refer to Section 13 of the IGST Act to determine the place of supply. Now, there are three provisions which we have to discuss. Firstly, Section 13, subsection 2, which is a no-brainer, which says that if you are providing service to a consumer outside India, then the place of supply becomes outside India, and accordingly, it will qualify as export of services.
Sir, sorry to interrupt. CA Rajesh sir, kindly mute yourself. Rajesh Agarwal sir, please mute yourself.
Yeah.
Sir, Rajesh sir,
आपने बाबा को पेट पर मारा तो बताया कोई बता रही थी
Rajesh sir, can you hear me?
आपको कुछ बता रहे
Okay, let me try to connect you. Okay. Darshan sir, please go ahead. I'll try and connect to him.
what I was saying is the place of supply provisions are important to determine whether my service will qualify as export. Section 13.2, it says that if it's dependent on the customer location, but it is subject to other subsections being not applicable. Now, there are two subsections which I want to specifically discuss in this scenario. 13 subsection 4, it deals with services provided in relation to immovable property. It says that if I'm providing any services which is directly in relation to immovable property, and just reading the highlighted portion for our brevity, then it also says granting of right to use the immovable property. In these scenarios, the place of supply will be the location of the property. The question here is whether I have provided any services being an FTWZ unit providing warehousing services, whether I am providing any services which are in relation to immovable property. Second, we'll discuss this. Second situation which we need to analyze is 13 subsection 3, which says that the place of supply of services shall be the location where the services are actually performed. So this says that services supplied in respect of goods. Now in my case, the warehousing services are given in respect of goods which are given to me by the foreign customer, which are physically made available by the foreign customer. So service is supplied in respect of goods which are required to be made physically available by the recipient of services. In such cases, the place of supply becomes the location of the customer. So, in such cases, the place of supply becomes a performance location. So, the performance location would be India. So, if 13.4 and 13.3 is applicable, then the place of supply becomes India. And you cannot say that this qualifies export of services. Now, what is the scope of these two subsections? So, to take some guidance, because we know that these similar provisions were there under the service tax regime in the place of provision of service rules, and there was a detailed education guide issued by CBIC. Let's have a look whether what is the guidance given by the education guide. Education guide paragraph 5.5, it refers to rule 5, which is equivalent to our 13.4, which is based on immovable property location. There is one example given of land related services, which includes warehouse space. Then there is some explanation also given, which says that the place of provision of service rules applies to services which directly relate to specific sites of land or property. And therefore, if your activity is closely connected with the property, because if you read the last line, right, second last line, sorry, thus there needs to be a very close link or association between the service and the immovable property. So if your service is linked with the immovable property, then your place of supply will be immovable property, and then in this case it will be in India. Now again we refer to rule 4 of the erstwhile place of provision rules, which again is equivalent to our 13.3 of IGST Act, which is the performance based services. Here the question was, what are the services that are provided in respect of goods that are made physically available? Now again, if you read certain highlighted portions, services that are related to goods, which are so it says this rule covers the goods which come temporarily into the physical possession or control of the service provider, and without this happening, the service cannot be rendered. Now, in my case, it is it is squarely possible that I cannot provide the service without the goods, without taking the possession of the goods or control of the goods, because my warehousing services requires me storing the goods, having doing the loading and loading of the goods. So there is a physical possession of the goods happen to me, and my services are linked with these goods. And specifically, if we see the underlined, the last underlined portion, it includes storage and warehousing services. And the last sentence, it will not cover services where the supply of goods by the receiver is not material to the rendering of the services. Now, in my case, this is quite opposite, because my activity is important. For my activity is important that I receive the goods from the service receiver. So with this background, I would say that there is no clarity on this issue, but performance-based service is one basket which is possible that your services may fall under 13.3A, and you are required to pay tax because the place of supply becomes the performance of the services. Again, I would like to refer to one more international precedent on a similar issue, and you need to see that whether this precedent is helps you after reading the agreement with your the FTWZ unit and the foreign customers. In most of the cases, we need to analyze each of the agreements and to see whether this decision, because this is a very important decision given by the Court of Justice of European Union in the case of RRR Donley. It says that you have to first see that what is the incident, what is the primary activity which you are doing, because your storage of goods would also involve certain other activities and which are indivisible. So it says that your activity of storage would involve activity like loading, unloading, your safekeeping of the goods, having a proper infrastructure to ensure that the goods are not damaged. So this is one important aspect which they brought out to see whether you are providing a mix of some activities, or it is a pure play storage activity, and whether these activities which you are doing, there are multiple activities, whether you can split those activities. They also highlighted that immovable, if you need to see whether providing any immovable property is the most key aspect of the service provision, whether it is the essential element for providing the service. It says that whether you have to analyze whether the customer who is approaching you, whether he has approached you to provide services in relation, whether he is interested in providing property services. And the last angle which they say is recipient of, whether you need to see whether your service recipient had an right to access the property which you had blocked for him, and whether the area which you blocked for him, whether it was exclusively for him, or whether because how do we define exclusivity? It means it was a dedicated block space for this consumer. Even if there were no goods, I would still have to block that space. That space would be empty, but still it would be for the consumer. So all these factors you have to keep in mind to determine whether, I would take an analogy of, say, whether say when you are parking your car, whether when you are giving your car to a valet for parking, whether you have taken a property service for giving him to park your car wherever he say parks your car in a garage, whether you have taken a property service from him, or whether you have only taken a valet service from him, and therefore it is not related to property or property, and probably it is not related to the goods also. So these all factors you need to consider while drafting your agreements, and see whether your activities, how your activities can fall in these factors, and whether then you have to determine whether it will be export of services or not. Now, continuing with this same principles, let's go ahead and take a different case study from this again warehousing and storage industry, which belongs to container freight station. Now, to give a brief background of how this industry works, the container freight stations are generally located closer to port areas. So what happens is whenever you want to export certain goods, say outside India, your cargo may not be sufficient to fill the entire container of say 20 feet or 40 feet. Therefore, your cargo is termed as less than container load shipment, which is called LCL shipment. And you transport your goods into say small trucks or tempos, and it goes to a CFS facility. This CFS facility will then receive goods from various such exporters, which are then consolidated, put into containers based on their dispatch locations, based on their shipping lines, and there will be certain stuffing, destuffing activity which they do, and this full load container then goes to the yard or goes to the port area for loading onto the vessel. Similarly, when the goods are coming into India for by way of import of goods, a full load container comes at the CFS facility. The container is then unloaded at the CFS facility, and it is again destuffed. Specific cargo is identified. After doing customs formality, the goods then are transported in the respective importer's truck or transporter's vehicle. So, with this background, just like to touch upon certain issues in this industry. Now, this is a live issue which I want to discuss. Litigation is still ongoing on this issue. So there are certain charges which are levied by container freight stations. Firstly, they will charge ground rent charges for the space which is being occupied for your cargo. Then there will be lift on lift off charges which are specifically incurred for stuffing your cargo or removing your cargo from trucks via labor or forklift or certain equipments. Then there will be customs examination charges. So if customs officers want to examine certain goods, they will unload the cargo from the container, remove your specific goods and do a customs examination, and all these activities require certain labor and effort, for which the CFS will charge you custom examination charges. There will be cargo handling charges, then survey charges to verify that whatever declarations are being made in the export document, the same types of goods are going in the containers, or whether any goods are damaged or not. Certain port congestion charges for delay due to traffic at the port, and documentation handling charges and fumigation charges for certain types of goods which requires pesticides control treatment. Now, with all these charges, I have seen that the CFS generally use HSN called 996711, and they term it as container handling services, and this is how they raise the invoice. Now, with this background, uh, let's see whether there are certain exemptions which are given to storage and warehousing activity, whether those exemptions are available. Because it is a live issue, this CFS service providers have claimed these exemptions, and this is a big dispute which is going on. Now, entry number 24B of this exemption notification says that services by way of storage or warehousing of cereals, pulses, fruits, and vegetables is exempted. Entry number 54, it says a services relation to or cultivation of plants or any other similar products or agriculture produce by way of loading, unloading, packing, storage, or warehousing of agriculture produce. These two activities are exempted. And lastly, if we come to explanation 2D, which defines the term agriculture produce, it says that agricultural produce means any produce of cultivation of plants. And read last two lines, which says that on which no further processing is done, or such processing is done as such is usually done by a cultivator or a producer. This does not alter its essential characteristics but makes it marketable. So this is the interpretation issue here which is going on, is whether the activity which is done by CFS, whether it can it be termed as storage or warehousing. With a specific question here is that if you see the first table, I mean the first column of the table, the HSN for the second entry is 9986 given in the exemption notification. In 24B also has two optional exemption, HSN 9967, 9985, while the CFS have specifically used the HSN 996711. Now, with this background, can we still say that CFS is providing storage warehousing services, whether they have the exemption? Because they have specifically mentioned on their invoice it is container handling services. Now, this is a big debate going on, and there are certain points which we need to discuss. Whether the CFS is providing services of storage or warehousing. If yes, then what is the impact of a wrong HSN classification? Whether HSN classification is important, or can it be said that it is merely a procedural error? And if we say it is providing storage warehousing, whether then all the charges which are separately levied in the invoice and there is a separate price identified for each charge, whether all these will together be treated as a composite supply of storage warehousing and the exemption can be claimed for all the charges. So these are the first two issues which relate to the classification of the service. And the next issue which arises is because when this exemption is for specific commodities like agricultural produce or fruits or pulses. Now, specifically when you talk about agricultural produce, it says that the process should be done by a cultivator or producer. Now, there is a debate which is going on that this exemption is not available for agricultural produce which is imported from outside India. There are certain advanced rulings which have said that the agricultural produce definition uses the term primary market. and the primary market should be read to mean farmers market like mandi or arath. It cannot include goods which are procured from outside India, and such commodities will not be considered agricultural produce. So how do we decide whether, firstly, whether this is storage or warehousing or not? So, friends, in my view, if we look at the entire setup of a CFS, the purpose of setting up of a CFS is to enable a temporary storage warehousing facility for goods which are to be ultimately moved to the port area. Though they may have used the term container handling, or they may have used a different HSN, but we have to look at the purpose of the activity, the purpose for which goods are coming to the CFS facility, and the purpose of actually setting up the entire CFS facility. The purpose is to enable a temporary storage place, temporary warehouse place before the goods actually either go to the vessel or the goods actually go to the importer in India. And that is how it should be looked at, and it should definitely qualify for the storage warehousing exemption. The wrong HSN classification, I believe, could easily be argued based on procedural errors or based on a wrong. Probably we can also argue that this notification says HSN so and so, but ultimately you have to look at the activity which is being done. If I'm doing the activity of storage, warehousing, loading, unloading, and even packing, because they do stuffing, destuffing activity also. So whether all these activities I mean, HSN classification should be ignored in this case. And then whether it will be treated as a composite supply or not, when we refer to the definition of composite supply, it says that it made by a taxable person, which are consisting of two or more taxable supplies, which are naturally bundled and supplied in conjunction with each other. Though the activities may be termed as different, though there will be multiple activities involved for which various charges are levied, but we all know that these are naturally bundled. It is not possible that I do only customs examination and I don't charge ground rent. The primary activity here is to recover the charges for storing the goods temporarily into my premises, and there are certain ancillary activities which I am doing, which are incidental to my providing you service of temporary storing of goods, and therefore it has to be treated as a composite supply in my view, and the principal supply should be of storage and warehousing. Now, but there is a decision given by Ahmedabad CSTAT tribunal under earlier regime, which has a different finding, and which actually against the assessee. It says that no person would bring goods to CFS just for the purpose of warehousing or storage. Goods are brought to CFS for the purpose of import or export, and they are temporarily coming for only for transit. And therefore, the activity is incidental to cargo handling, and your main purpose of CFS is to handle cargo for the purpose of import or exports. So this is a decision which is against the assessee, and of course, this will have to be tested because this issue is ongoing under the GST regime also. Now, coming to the scope of agricultural produce, whether the goods, whether this exemption of agricultural produce is available for imported goods also. Now, if we read the exemption entry number 54, it says that loading, unloading, packing, storage, or warehousing of agricultural produce. It nowhere says that my activity should be related to agricultural produce. It says that the product for which I am doing the storage or warehousing should be an agricultural produce. So it means that it is not emphasizing that my activity should be of agricultural produce. And therefore, when we read one interesting decision of Gujarat High Court, in this case, the Gujarat Cooperative Milk Federation had approached the government to clarify whether chilling and packing of milk for retail sale, whether it is exempt from GST or not. And they gave a specific clarification that chilling and packing of milk for retail sale is not exempt. The High Court says that such clarification and such instruction given is based on a wrong and false premise. They say that raw milk per se is an agricultural produce, and the milk cannot be stored without chilling. Otherwise, it will get spoiled, and it doesn't alter any essential characteristics of the milk. Therefore, it says that you have to look at the product. The product is raw milk. Raw milk is an agricultural produce. And then if you are doing the activities which are listed in the exemption notification, then you should qualify for this exemption. So they lawmakers, the Gujarat High Court has focused that you have to see whether the product per se fits under agriculture produce or not. Now, there is a decision which is slightly giving a different finding on the interpretation of the term primary market, because this was being specifically, highlighted in certain advanced rulings that imported goods do not qualify as primary market, do not qualify as meant for primary market. Now, this decision, though the product here is different, it is a tea leaves or tea which we are discussing, but we look at the observations given with respect to identification of primary market. The decision given by Guwahati High Court in this case, it clearly says that primary market should mean the market where the agricultural produce are being sold as such, and it is not meant for selling for final consumption. It says that you have to see whether this market where the goods are being sold, whether it is a normal market where the farmer would sell the goods. So it is again hinting that it should be similar to the findings given by advanced ruling, where it says that the primary market here means that the market where the farmer would sell his goods. The farmer would not sell his goods to consumers directly. Farmer may sell his goods to a mandi which is nearby or an arhat which is nearby. Therefore, if the goods are goods which you are the agriculture produce in discussion, if it doesn't fall in this classification of primary market, so it means if you are importing goods which is directly meant for consumption, because importing goods would not probably go again to mandi. It may again directly go to a specific importer who is importing goods, and therefore this exemption of agricultural produce may not be allowable. So again, my friends, this is a big dispute which is going on, and this requires a clarity from the government, because this sector is reeling through this issue, and there's no clarity clearly, and different interpretations are being made by different players. The next areas which I want to touch upon are related to charter hire of vessels. Now I'll just quickly run through the facts of the case which I want to discuss. Typical vessel which is given on charter hire to an oil and gas exploration company, which is say operating in the territorial waters. Now the scope of services given by the vessel, given by the oil and gas exploration company to the vessel owner is that he has to require to carry man and material between base and offshore installations. He is required to supply duties including transfer of fuel and fresh water. He is required to carry safe standby rescue operations, assist in emergencies, do routine surveillance, and there should also be some offshore work round the clock. The vessel should be available round the clock for any offshore work. Now, these all terms are included in a standard charter party agreement, and the charterer would charge a lump sum per month higher charges based on the agreed consideration to the oil and gas exploration company. The vessel owner will also give a master who would is equivalent to a sailor of the vessel, who would operate the vessel, and he will be operating under the instructions of the oil and gas exploration company. So these are the broad responsibilities given to the charter, to the person who is giving the vessel on charter. So there the discussion comes here is that what is the classification of the service vis-a-vis two rate entries under entry number 10.2 and entry number 10.3. Whether the services which we discussed earlier would classify under 10.2 or 10.3. So we read this entry, we'll read this entry. 10.2 says that time charter of vessels for transport of goods, and the GST rate is 5% subject to certain restrictions on the ITC. We'll not go into the restrictions. Then there is a residuary. If you don't fall under 10.2, then you go into the residuary entry of 10.3 of GST at 18%. Now here why it is important, because we see that whatever tax you charge to oil and gas exploration companies, in most cases, because petroleum is outside the ambit of tax, the credit may not be available to the customer. And therefore, the tax rate becomes here very important, because it is a cost to the customer. So point here is the entry on the right hand side says a time charter of vessels for transport of goods. The point I which want to discuss here is whether uh, the entry here says that the vessel should be meant for transportation of goods, or whether my activity should be of transportation of goods. To elaborate further, it is possible that the vessel's structure is such that it is meant for transportation of goods, but I may be doing activities which are transportation of goods plus some other activities. So whether this will qualify as a concessional rate of 5%, or whether it will go into a residuary category. So whether the purpose of hire in this exemption entry is important, or whether you have to see that what is the nature of the vessel and the actual use of the vessel. So how do we decide that? And whether if we say that no, the purpose of hire is not important, you have to look at the nature of the vessel, or either ways, then what will the implication on the bundle of activities which you are doing? So how do we determine that? In my view, if we read the entry carefully, it says time charter of vessels for transport of goods, because here the emphasis, if we say, is on the term for, because the purpose is derived from the term for. The entry says that the vessels should be given on time charter for transportation activity. So in my view, the actual use of the vessel is important. The vessel may be meant for any purpose, but you have to see whether what you are using the vessel for. If the vessel is meant for transportation of goods, but you are not doing any activity of transportation of goods through this vessel, then the concessional rate will not be available. Now, if we say that, then what is the implication of the bundling of activities? So, because here in my scope, the first scope says you have to carry man and material, and there's some second scope also says that I have to carry some material, but then rest of the activities do not involve any carrying of materials from my side. So, still whether it will qualify for this concessional rate. So, we refer to the guideline given on bundling of services by in the service tax education guide again. So here the guidelines clearly said you have to look at the perception of the customer, the perception, the practice in the industry, and how are your services perceived. So when you are being hired by any oil and marketing companies, whether you are being hired for actually transporting the goods, or whether you are hired to provide any or some other types of activities, or whether you are hired only to provide some support activities, you have to also see that whether there is a single price. So in this case, yes, there is a single price for the entire activity. Whether the elements are advertised as a package, in most cases, yes. And whether the nature of incidental or ancillary activities, so what is the nature of incidental or ancillary activities? So in this case, the nature incidental activities that the vessel should be available 24/7. It should be available for emergencies. So in my view, these are all incidental or ancillary services which are available, which are actually required for doing the main activity of transporting from one location to another. And whether different elements are not separately available. So yes, the different elements may not be separately available in this case, and whether the elements are integral to one overall supply. So yes, it is possible that we can argue that in all the other activities are integral to one supply of transporting goods from one location to another. So in this case, again, the terms which are written in the agreement become very important to see whether your charter hire activity will qualify for the concessional rate of 5% or not. Now, in this same industry, there is one more issue which hovers around this. So what happens is when I give my vessel on charter hire, uh, the vessel will per se have certain fuel component in it, which is required for running the vessel. I'm not talking about the fuel which is loaded on the vessel for transporting, but fuel which is required for running the vessel. Now, the vessel, my arrangement with the customer in most cases in this industry would be such that the cost of the fuel required for running the vessel will always be in the scope of the customer. I am not going to incur that cost in most of the cases, because the vessel is operating under the instructions of the oil and of the customer. So when I am giving the vessel on hire, there is certain fuel which is there in the fuel tank of the vessel, and whenever say after the end of the cycle of the charter party, the vessel is given back to me. I will again measure that I had given certain quantity of fuel when I had given the vessel, it had certain quantity of fuel, and when I got the vessel back after the end of the charter hire arrangement, if there is a difference, if I get a vessel with a less fuel, then I would recover that fuel from the customer. And if there is a vice versa case, if the fuel is more, then my customer is going to recover certain amount from me. So my question here is, whenever the fuel is less and I am going to recover certain component, I am going to recover this from the customer, whether this will also be taxable, because fuel per se is outside the ambit of GST. So whether this will also be taxable as a composite supply, as a part of my main activity of giving the vessel on hire. So if you look at the valuation provisions, section 15(2) clearly says that any amount that supplier is liable to pay, but which has been incurred by the recipient of supply, should be included in the price. Clause C says that incidental expenses which are incidental expenses which are incurred for any and any amount charged for anything done by the supplier in respect of the supply of goods or services are to be included in the valuation provisions. Now, if we read these provisions carefully, clause B says that there was certain goods or certain amount which I was supposed to incur, but I have not incurred. So my case does not fall under clause B. Now, clause C says that something which I was required to do, and I have, for doing those activity, I have incurred certain expenses. Then again, it has to be included in my value of services. So in this case, practically speaking, I am not required to give him the fuel for running the vessel per se. It is a responsibility of the customer to load the fuel and use the vessel as per his requirement. So clause C may also not be applicable. Now then, what about composite supply? The composite supply provision will trigger to say that all sort of taxable supplies, all sort of values will be a part of the same supply. So if you read the definition again, composite supply means the supply made by a taxable person consisting of two or more taxable supplies. So the fuel which I am supplying should also be a part of the taxable supply. The fuel per se should qualify the taxable supply. Now, when we go to the definition of taxable supply, it says it is something which is leviable to tax under this act. Now, when we go ahead, we say that when we say taxable supply means something on which is leviable to tax, and whether the fuel or diesel which is consumed, whether it is leviable to tax under this act. So if you read Article 366(12)(a) and 279(a)(5) of the Constitution of India, it says that goods or service tax means any tax on supply of goods or both on except alcoholic liquor. So per se, the definition of goods and service tax includes fuel also. Fuel is per se not excluded because specific exclusion is given only for liquor, alcoholic liquor. 279(a)(5) says that the council has the power to charge tax, and they will recommend a date from which the tax will be levied on the fuel products. So this means that there is a levy on the fuel, but as of now that levy is deferred, and therefore the fuel component would qualify as a taxable supply, and it is a part of the composite supply. And so whatever fuel recoveries which are being made, it will attract tax at the same rate which is chargeable on the charter hire activity. Now, the last issue in this industry is related to victualling. Now, victualling generally means is whenever I give my vessel on hire, I'm also required to ensure that the ship has certain provisions for food and water, which is required for the crew and the passengers. So whether now when I am required to arrange for food and water on the vessel, I would certainly procure food and beverages and other required material from third-party vendors and then supply it on the vessel. So whether I would get credit of the fuel, of the food and other expenses which I have incurred, because Section 17(5)(b) is a specific restriction for claiming ITC on food and beverages and outdoor catering. So will I get ITC because this victualling becomes a big component if the vessel is going on charter hire for a long period. Now there you have to refer to the proviso. because proviso gives an exception to the restriction for claiming ITC. Proviso says that if the ITC in respect of such goods or services, so in this case, such goods becomes your food and beverage or outdoor catering services. So if if the ITC on goods or services or both, it says it will be available if it is used for making a further supply of this further outward supply of the same category or as an element of a taxable supply or a mixed supply. So if I'm making a same supply as a part of any composite supply or a mixed supply, then the ITC should be available. So you have to carefully see whether your terms of the agreement clearly provide that you are supposed to arrange for food and water, and if yes, then you can take the benefit of the proviso and claim the ITC also. Now, the last topic which I want to touch upon with respect to the bundling of various activities. Now, in this industry, if you see, these are the certain types of arrangements which you will have for transporting the goods. As I had initiated my discussion in the presentation that there will be players who are doing multiple activities in this entire industry. So there will be certain types of these arrangements indicate those types of these terms over here indicate those types of arrangements. There will be certain types of arrangements where, say, when I am selling the goods to a buyer, I would say that the goods will be sold by me as X works, which is termed as EXW, which would mean that you pick up the goods from, I would tell the buyer, you pick up the goods from my location. I don't know how you want to ship it. It is your responsibility. Similarly, opposite view or an opposite arrangement would be DDP, which is termed as duty delivery paid shipment. This would mean that the buyer is informing to the seller that it is your responsibility to ensure that the goods reach to my factory or my warehouse or my office after paying all the duties and everything, and I don't know how do you want to arrange it, but it is your responsibility. So these intermediate terms are again similar terms with some variations. Now that is how these arrangements are made. So the question here is, when I am being a freight forwarder, I have got a contract to transport the goods, say from one location to another with a bundle of activities, then how should the tax be paid? Because for each element there will be a separate price agreed for road transportation, for handling at a port, for international transportation. For all these activities, a separate price will be agreed. Whether everything can be treated as a composite supply or not, this issue is still plaguing the industry since the inception, or I would say even before the GST regime. Since the service tax regime, this issue has been plaguing the industry. So typically what happens is when a freight forwarder raises an invoice, say to a foreign customer, I've taken one simple example. When the foreign customer has given me the contract to, pick up the goods from an Indian warehouse, Indian exporter's warehouse, and supply it to him outside the India. Now, I, as a freight forwarder, would do three types of broad activities. One would be ocean freight activity. I would do cargo handling activity at the Indian port, and then there would be road transportation incurred at the Indian port also. So all these three activities are being done by me, which are related to Indian land and the foreign transportation from this port, Indian port, to the foreign port. Now the tax applicability I have listed down because of amendment in section 39 being omitted, and the place of supply for ocean freight activity and road transport activity becomes 13.2, and therefore it is zero rated because customer location is outside India, and accordingly it qualifies as export of services. But what happens about cargo handling services, which I'm doing in the Indian land, where whether it will fall under section 13.3a, which is the performance basket, or whether can it be said it is a bundle of all the activities, and I say that everything goes together, and if ocean freight is the principal supply, and therefore everything should be zero rated. Now 13.3a, if we read again, it says services supply in respect of goods which are required to be made physically available by the recipient of services. Now in this case, my recipient of services is the foreign customer who is outside India. The goods in India are being made available to me by the Indian exporter. So can we argue that the goods are never made available to me by my recipient of service who is outside India? The goods are given to me by an Indian exporter, Indian exporter of goods, who and I'm going to pick up the goods from his warehouse and then transport it to outside India. So this is one argument to say that 13(3)(a) is not applicable, but of course it's a very technical argument to make. One can also argue that recipient of services would mean that if the goods are made available by the foreign customer on behalf of someone, that would also cover. Again, if we go back to services education guide, which you have seen in one of the earlier slides, but not read everything, but this performance basket specifically includes in the last highlighted underlined portion cargo handling service. So it clearly says that cargo handling service will go under performance basket, and accordingly the place of performance becomes important to determine whether what is the taxability of the transaction. It says the place of performance will be India, and accordingly tax is payable in India. That is how, if you follow rule 4 and go by that 13(3)(a). But I would believe that there is a good argument to make that the entire supply is a composite supply, and recently there will be certain clarifications given by one of the associations of this industry also. And there is one decision given by Bombay Tribunal in this context where they have said that you have to look at the entire chain, how it is operating. You cannot bifurcate the chain in bits and pieces based on certain assumptions. Artificial splitting is not permitted. So there are key 4 findings from the decision. It says that the entire logistics operation constitute a composite transaction, which is aimed at transporting the goods. And the recipient of services being outside India, payment received in foreign currency, it should qualify as export of services. And it says that artificial splitting of the transaction into domestic and international segments was not permissible. You have to look at the principal activity. Principal activity is for transporting the goods from India to a place outside India. And therefore, your principal activity, if it is X0 rated, your entire chain of activity, including the cargo handling which is done in India, should be treated as 0 rated because it's a part of the same chain of activity. So this is a good case, and of course in principle also I believe that it's a good case to argue that this entire chain of activity should be treated as a composite supply. With this background, friends, with this entire issue, I end my presentation, friends. This industry, my friends, is very complicated. I've tried to touch upon certain issues, decode the chaos which is there in this industry, and tried to unpack the some of the GST implications on these issues, the mysteries on this issue. Friends, I recently somewhere got recollected, and my friend we were discussing. He just said me that steam engine was one of the first industrial revolution, which was steam engine caused the first industrial revolution, and this shows the importance of the logistics sector in revolutionizing any nation or any economy. That is why a lot of issues which are plaguing the industry needs clarification, needs certain interpretation issues which are there, need certain guidance from the government on how should it be handled, and certain classification issues also require a detailed explanation from the government side. So with this, I end my presentation. We can open the floor for discussion or any queries which anyone has.
Thank you so much, sir. There are a few questions in question and answer box, and there are also a few questions asked in chat box. We would be really grateful if you can answer a few questions.
Sure. So
there is this question by Nilesh Dave.
Okay.
Can you go through it, or you want me to
1 second, I'll just
read
open
the
it.
question?
Nilesh. I think the first question is from Vishal Shah. Should we take that?
Sure.
So it says whether RCM is applicable on import of services for a shipping logistics company. So in general, yes, RCM is applicable for a shipping logistics company, subject to place of supply provisions. But yes, RCM is applicable on import of services. how to charge the GST on export of services for a logistics company? Will the same come under intermediary services? So, in general, export of services would not attract tax, but I think your query is not clear that what will come under intermediary services. If you can please clarify what specific activity you want to discuss. The third question he has asked is, what if a company has booked a space with a shipping company and he didn't able to book the space full, he sell the space to another company, then what will be the treated on this? So this again, as I said, there's a lot of emphasis which I have placed is on the established whether you can demonstrate whether the activity is on a principal to principal basis or not. And if you are able to demonstrate that, then definitely you can take the concessional benefit. Whether the ocean freight can be considered in turnover for computing the applicability of e-invoice. Yes, if you are providing ocean freight services, that to be considered for e-invoicing. E-invoice is applicable to logistics company except for GTS. Vipul Samaya has asked the question whether the problem of this deemed supply and ISD will.
FCM.
Yes, it will. Yes, sir, you're right. The problem will continue in 5% FCM also with no ITC. Amol Kabra, there is an exemption entry, transport of goods by road. Please put some light on this. Yes, sir. This exemption is specific for, I would believe this exemption is specific for persons who are providing services who don't qualify as GTA. So whether you qualify as GTA or not is dependent on whether you are required to issue a consignment note or not, and that is governed by Carriage by Goods Act by road. So under this act, you need to analyze whether you are required to issue a consignment note, because consignment note is an important document which will determine the risk which you are carrying while transporting the goods. So if you are not required to issue a consignment note under the Carriage by Goods Act, then definitely you can claim this exemption. But as I said, you need to analyze whether this is required or not. Next question is, CNF agent charges various charges in the invoice like documentation, so and so. So what is the POS for these services? So this we have covered in the last slide, that if it is a part of your composite activity, then the place of supply will be the customer location, and accordingly you can determine the taxability. Manoj Pandaji is saying, we as railways transport agricultural produce which qualify as exempt goods. We also transport trucks which carries commodities in our ro-ro trains, which charge 5% as GST. Just want to understand, if the trucks carry agricultural produce, can we consider it as a transportation of food grain and not the truck, and consider it as exempt service? So sir, your activity of transporting food grains will be exempt, but I did not get your query on the truck. If you can please clarify what do you mean by this?
Manoj, can you please unmute yourself?
Yeah, if he's online, if we definitely we can take it up.
Okay, I think meanwhile, Vishal has
Vishal Shah,
put up
yes.
some clarity.
Export of service, a person located in Dubai has placed an order with Indian company in Gujarat, and the goods are required to be delivered in USA. Logistics company charged the invoice following way: ocean freight to the USA company, documentation, transportation, other charges charged to Gujarat company 18%. Yes, sir, this treatment is correct. Your first activity will be export at 0 rated and second activity at 18%, because there are two separate customers. It will not be as a composite supply. So any other persons who are online and want to discuss certain queries?
Actually, sir, there are a few questions in question and answer box also. I think first, there's one question by Nilesh Dave. He's asking, if the transporter is operating in multiple states and under RCM, does he need to register for GST in each state, or he can continue to operate from HO and issue invoice from HO? All his contracts with his customers are registered with the HO address. The branches are only for smooth operations. The LRCN issued will be having address of HO and branches also. Will the answer change if the opting under FCM at 12%?
So yes, so Nilesh, this is a good option which you can explore. And as you have clearly mentioned that the entire documentations are from HO, and definitely you can continue with a single registration, and the answers will remain same even if you are opting for FCM with respect to registration. You can continue with single registration. Next is from Sumalata. Hiring of goods transport vehicle by GTA is exempted from GST. Yes, this is exempted, but for that you need to have an hiring document in place, hiring agreement in place to prove that whether is you have actually given the vehicle on hire. So this has to be proved through documentation. Next is Mohak Ruya. In case of export consignment, whether logistic company in India should charge GST on various like handling charges, custom clearance, and so yes, this again I have clarified in my last slide, and again one more person asked this query that if it is a part of the composite supply, then it can be treated as export of services. If not, then if it's doing only activity of custom clearance and packing at Indian port, you are required. The place of supply can be the location of performance of the goods in India, and you are required to charge tax. Navin Kaushal Gupta, whether GTA having branches in multiple states and having turnover approx 5 crores can provide intra or interstate supply based on transporter ID. Yes, sir. No, transporter ID cannot work. If you are having turnover above 5 crores and operating in multiple states, then definitely you are required to take registrations. Of course, the question answers will change on whether if you are having services a full entire supply is under RCM or not. If your entire turnover is under RCM, then definitely you are not required to take registration. Whether RCM on transportation applicable if CHA purchase transport services. Transporter has not mentioned anything in the invoice. CHA opted for 12% FCM rate for output service. So yes, if the bill is raised by the transporter in the name of the CHA, then CHA has to pay tax under RCM, and then the transporter, the CHA then cannot again opt for 12% FCM. CHA then will have to go by 18% forward charge, because there can be only one GTA in the entire chain of transaction. There cannot be multiple GTA in the entire chain of transaction. Again, a question from Navin Kaushal Gupta, whether GTA providing service to unregistered person is exempt. Yes, sir, it is exempt. I think it's entry number 21 or 22, but yes, it is exempt. Bhavnishi Sai Kumar, whether can I follow both RCM and FCM on outward supply? No, you cannot follow both options. You have to select either one option during a financial year, but you can change the option after completion of the financial year. But when you are in a financial year, or when once you have opted for FCM, then you have to follow for all your invoices. You have to follow FCM. You cannot say that for one transaction I will do FCM, for second transaction I will do RCM. This is not permitted.
If there are no, is there any more questions? Okay, I think there is some addition by Naveen Kaushal Gupta. Company follows RCM in above question.
Navinji, if you're online, can you unmute and discuss the query? Because
I think participants cannot unmute themselves.
okay. So if your question is your follow-up question is respect to your first query on whether GT having branches in multiple states can provide intra or interstate supply based on transporter ID. So yes, if you are you're entirely under RCM, then there is of course there's exemption. You need not take registration. You can continue your business based on transporter ID. Yes.
Thank you so much, Darshan sir. This was really an excellent session, and the way sir explained everything starting from concepts, regulations, and judgments, and the flow of the session, and mainly the examples, and the PPT flow charts. They were really very good, and that made session really very easy to understand. Thank you so much once again for your time and effort, sir. We are really grateful to you. Thank you.
Thank you, Ishita, for your kind words, and I once again thank WIRC and ICI for this opportunity.
Thank you, sir. Thank you everyone for joining today.
Thank you all the participants.